What's going on with Making Tax Digital? Let's have a quick catch up to make sure you are up to date with what you need to know about Making Tax Digital arriving next year. Hi, I'm Kimberly Shapcock, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Making Tax Digital is coming, and we're now getting to the nitty-gritty parts of Making Tax Digital and starting to really understand what is needed, what is happening, how it is fitting together. So the key thing that we need to start with is what is the qualifying year to determine whether next year is your start date. And the key thing we have got here is that your 2024-2025 tax return will determine if you are in or if you are out, or at what level you are trading. So what we need to be aware of is when you've got your 24-25 tax return completed, which we're in the throes of doing those at the minute, and they will be done by the 31st of January in 2026, as long as you're hitting the deadline for your tax return. And this will then show you what your gross rental income is and your gross self-employed income is. These are the two crucial numbers because these added together will tell you what your total income is, which may be considered for Making Tax Digital. If that figure is over 50,000, then you are in. You are in from the 6th of April 2026, and you need to make sure you have everything pulled together. So this is whether you have rental income, gross rental income over that amount, whether you have self-employed income, or whether together it is over. If you are not over this, then you are not in yet. And that's kind of one of those areas where you may see, I'm over 30, great, you know you're over 30 at the moment, but that will not mean you're in from April 2026 unless you choose to voluntarily go in early. For anyone in future years, we will need to check what the qualifying year is to see whether you are over the 30,000 limit and whether you are over the 20,000 limit. So keep an eye on the channel for videos in the next year, which will determine all of those sorts of points to help you figure out when you are going to be in or out. You may say, that's great, I was over 50 last year, but I've sold the property now, so I'm not in anymore. And unfortunately, one thing I will say is that you are still in because the 24-25 tax duty return is the determining factor. The fact that you have sold the property since that date just means that when you go in, you will then be able to tell HMRC, I've now ceased, so I've sold that property and I no longer need to do it. But the key thing I will say is you still need to register for Making Tax Digital, and then you need to tell them that you have ceased and that you need to come out of Making Tax Digital. You can't just not register and not do anything. If you do that, there may be penalties that apply because you won't have complied with the rules on the fact that you are over. Obviously, HMRC will know that you are over because on your tax return, it has those boxes on, and the AI, the computer program, whatever they use, will identify that we're expecting this person to have registered, we're expecting a return, and you will likely be getting a letter next summer to say that you've not registered, you've not done a return, we think you should be, here's a penalty, here's what you need to do, please go and do it. So the idea here is to make sure that you know that you need to do something and then tell them that you don't need to do something. So it's all here about action to remove the action that you potentially don't need to actually be taking. So it's just something to very much be aware of, especially if you are making some changes in this year, which may have an impact on what you need to do. As part of the Making Tax Digital account side of things, you will need to determine how you are showing your income. So this may be on a cash basis or an accruals basis. Now, a cash basis is very much how you receive the money or pay the money out, which works very well for certain things if everything remains regular and the ins are the same, the outs are the same. You don't have any hiccups of big lump sums, which should actually be spread over different periods. So that's one option. The other option is the accruals option, which is basically looking at the principle of matching and looking at what income relates to the period we're doing. So the 6th of April to the 5th of April for the tax year you're looking at. and only including the income and the expenses that relate to that, which then leads to the adjustments at the year end, because you may have money owed to you that's not been received, but you may also have money or invoices that have been issued that actually relate to next year. So that is where you have this principle of accruals, where you only include and accrue the income for future periods, you defer the income for future periods, you include expenses that you may not have paid for, but it relates to the period. Now, there are two choices that you have, and when you do your first return, you will determine which approach you take. Now, that does not mean to say that you cannot change that approach. You may start with, say, the cash approach, but then you find actually there's a lot of ups and downs in this period. It doesn't make sense to be doing that. When you come to do your end of year provision, your end of year report, after you've done your quarterly ones, you are able to change that approach. So if you find you've done it under the cash method, but actually you received 6 months in advance, and by doing it on the cash method, you're going to be paying a lot of tax this year because you've had, say, 11 months of rent. In the last month, then you've received the 12 months rent for the next 12 months. You may go, well, actually, that doesn't make sense. I'm paying 2 years worth of tax on this nearly 2 years worth of rent, when actually realistically this year you've had 12 months, next year you'll have 12 months, it's just you've received it all up front. So it may be there is this way that you look at it and go, actually I might need to change to a different method, the accruals method, to make sure that everything is actually flowing accurately, rather than we've got these big ups and big downs, which for your self-employed, your rental, you need to just determine what is going to be the right approach. But on a positive, you can make a change when you do your end of year return, which is just confirmation that we have that choice. Just you can't change your option throughout the quarterly submission points. A final point I want to note today of some of the updates, which will no doubt be getting more updates as we get close to the implementation date, which I will keep you up to date on, is HMRC is not providing any software. There is no software from them, there is no bridging software. This means as an individual, you will have to source something. Now, as we've said on previous videos, you do have a few options. You can use some sort of software like the Hammer, QuickBooks, Xero, that sort of option. You can be using spreadsheets or digital software and use bridging software, which will take your spreadsheet or Google Sheets through their software, which will then connect to the API with HMRC. Or you can go through your accountant, who will have appropriate software in place to make sure that they can fulfill the requirements, whether that be they want you to use software and put it in so that they can make the submissions, or whether they provide you some sort of spreadsheet and they have their own in-house bridging software, which will connect your information that you send to them to the HMRC systems to make sure that the submission is completed on time. As we've said on previous videos, there is lots of things to just be figuring out, and now's the time to be putting all of that into place so that you are ready to be going when you need to do that first submission in summer 2026. As you can see, we're getting lots of little tidbits now of things that are coming together. I'll keep doing some mini videos like this to keep you up to date on some of the key points and key things that I think are useful for you to be aware of. So do keep in touch with the channel to see what other Makingtaxdigital videos we have available on what it's all about, as well as some of the nitty-gritty details. We have a budget coming soon, and I'll update you again after the budget for any tweaks or changes that have been announced during that budget season in 2025. Good luck with getting ready for Makingtaxdigital, and please do leave any questions you may have in the comments so we can come together and get this sorted so we are all good and ready for Makingtaxdigital. Hopefully today you've got an idea of when you will be going into Makingtaxdigital and a few of the quirky rules that are applying, so you have a good understanding of what you may need to be doing. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing. less taxes.